Hello and welcome to BQ Prime. You're watching Q1 with BQ, and my guest today is from Ashok Leyland, Mr. Shenu Agarwal, MD and CEO of the company. Mr. Agarwal, thank you very much for joining us on BQ Prime. A very good set of numbers coming in the first quarter. Can you take us through how has been the domestic sales environment and what kind of volume growth have you seen there?
Yeah, so domestic industry has performed well in Q1 as well. It has maintained its growth momentum, both MHCV side and LCV side. Of course, Ashok Leyland has been able to do better than the industry in both the segments, MHCV as well as LCV. So our volumes have seen a growth overall. But I think what I would like to mention is that, in the last month in the analyst meet, we said that our near-term goal is to achieve double-digit EBITDA margins. And that we were able to do in Q1 itself. And that is because of our relentless focus on cost reduction, that we have been able to do.
That has been a surprise as well for the street, 24.6%. 3% EBITDA margin, I think highest in 4 years, if I'm not wrong. Can you take us through what are the levers for this EBITDA margin? Where all has the margins coming from?
Yeah, see, one thing is that the industry is, of course, helping. Industry, there is a momentum in the industry. And then whatever actions we started last year or a few quarters back, those are yielding results in terms of market share. We have been able to improve our market share both in MHCV as well as in LCV YOY basis. So that has given us operating leverage. And as I said, even on the cost side, we are very, very focused on reducing our cost. We are using many, many levers now. It is not just limited to value engineering or commercial negotiations, but it is getting into more deeper levers of looking at cost. So I think that has all helped. I think one more thing that has helped is our mix improvement, which is also yielding better margins for us overall. And also our ability to fetch better prices in the market is also one factor that is helping us.
Give us a sense of how the discount for vehicles have been. Has it reduced a bit? Have you been able to push push vehicles with lower discounts? Secondly, commodity cycle, there's a tailwind now coming in because prices have corrected some bit. How is that helping you as well?
Yes, we have been able to take a price increase in this quarter, that we had taken in the beginning of the April itself. And we are very, we are very happy that we have been able to retain that despite some of the competitive pressures in the market. I think that premium play that we are trying to achieve is also coming on the back of really a very good success for our Avatar range of vehicles, which we launched in BS6 era, and also on Bada Dost on the LCV side. On both these sides, I think the customer acceptance, the market acceptance has been really, really good. And that has helped us fetch better prices from the market. On the commodity side, I think I think it will play out a little bit more better for us in the balance of the year, because our price pass on for commodity happens with a 1 quarter lag. But we are seeing some commodity pricing easing out right now. So that should help us in Q2, Q3 and going forward. So yeah, so if industry goes well, which we expect it will continue to grow well, and we continue on our cost efforts, and also if we get into a commodity easing situation, I think we should be able to continue to do well as far as margins are concerned.
What kind of volume growth are you looking at on a comprehensive basis for the current fiscal?
Listen, we gave a guidance of about 8 to 10% industry growth in MHCV for the year. And we gave a guidance of 5 to 6% growth for LCV for the year. Now, since Q1, the industry has not grown to that extent, and that was expected because of some pre-buying that happened in Q4. We think that the industry might grow at a better pace than Q1 in the balance of the year. But we do still want to maintain our guidance of 8 to 10% of MHCV and about 5 to 6 for LCV.
Because we saw that kind of growth coming in, which you have reported as well, 3% jump in LCV and and more than 7% coming up for MHCV. So that's the reason I was asking that. When do you see this growth coming back to the LCV segment? Means, is there some real pain in the industry? Because since you're growing, but the industry as a whole has as a view is that there may not be much growth coming in the LCV segment, and MHCV is something which is going to be driving growth for commercial vehicle makers.
Yeah. So see, our view is that both MHCV and LCV will grow in this year. LCV might grow at a slightly smaller pace than MHCV, and the reason for that is we have a very good base, from last year going into this year for LCV. But LCV would also continue to grow. I think in Q1 the growth was a little bit subdued for LCV, also because of the flood situation and the rain situation, in many parts of the country, and also because of a little bit of a rural demand not picking up that well. But I think both these factors will play out well for the industry going forward. So I think LCV should also start performing better.
You came out with very good set of margins in this quarter. Do you expect to maintain the same level of margin which you came in Q1?
Yeah, our intention is to continue at double-digit levels of EBITDA, right? As I said, going forward, if the industry goes well, commodity prices ease out, and our cost-saving efforts continue to yield results, I don't see any reason that why we should not report double-digit margins even going forward in this year.
Is there any headwinds that you see in the coming quarters?
Not as such. See, the sentiment on the ground is really, really good. I think the government's focus on infrastructure and the amount of execution that is even happening on the ground, I think it is delivering very positive sentiments on the ground. I think also a few other fundamental factors are in favor of the industry. For example, for MHCV, the average age of the vehicle has now moved to about 10 years, while what it used to be like 8 years historically. So I think with those kind of things happening, with the scrappage policy, some effect of it coming in, with the fundamental movement in economy, I think it is going to be a good year. As I said, we still want to maintain our guidance for 8 to 10% overall growth for the year in MHCV and about 5 to 6% for LCV.
Are you seeing good volumes coming in into the scrappage thing, and as a result impact helping the industry? Means, as the policy picked up and getting older vehicles into scrappage?
No, not yet at all. I mean, the policy is in place for sure, right? But the infrastructure is coming up, right? It will take another, I think, couple of years, if not more, for the infrastructure to be set in. I think once infrastructure is there, policy is already there, then probably enforcement would start happening, right? So it is, I'm not saying scrappage is helping us right now, but more in a kind of a medium term, it will help the industry. I think right now it's just fundamentally everything is going positive economy-wise.
You're doing good in the defense sector as well. Recently, also you got back some defense orders. How's the defense arm doing?
Yeah, this is one business which is very close to our hearts because it gives us a very proud feeling to be able to serve the country in a special way. Defense business did not go that well last year, but right now we are hoping to build a very strong pipeline of orders for defense business. We announced an order of about 800 crores that we received just recently, but I think even beyond that, we think that we will be able to fetch more orders. So a lot of tenders are coming up from Indian Army now, and they will continue to come up in near future. And our tender win percentage is very high. It's close to like 75, 80%. So if these tenders do come out, then of course we see a very healthy top line for defense business going into the year.
Give me a sense of what is the kind of order book currently you're sitting on as far as defense orders are concerned, and what is the kind of potential tenders which are going to come in the next 1 year? To just get a perspective of how order flow is coming through.
Yeah, see, I think the Ministry of Defense, what the allocations normally are in any given year, range between 2,000 crores to 2,500 crores for land mobility, which is a business that we participate in, right? Our order book currently is slightly more than 1,000 crores. But if those tenders that I'm saying will come through and we continue to have a 75-80% win in our tender, in these tenders, then we hope to achieve a good volume in defense business.
Mm-hmm. And how's the EV business doing? Because that's also getting some good orders. How is the execution on time for that? And are you seeing more orders coming from state governments?
Yes, yes. So EV business is happening on both sides, Ashok Leyland, and for the buses and the LCV, we have this special strategic subsidiary called Switch.
Switch,
So
yeah.
Switch is doing well. Of course, no new tenders have been floated recently, but from the previous tenders, we have a healthy order book that we will now talking to various STUs to start executing those. Right, so that will continue. I think even on the Ashok Leyland side, there's a lot of focus and effort and investment that we are doing on the truck side. So that is also going to be reality in some time to come. Of course, there is a long way to go. As you know, that ecosystem has to play an equally important role, especially when it comes to trucks and buses, the larger ones, right?
Yeah.
So of course, we will participate with some of the ecosystem players to make sure that that happens. But on our side, we will continue to focus on developing and maturing our technology. I think on the LCV side, the business that is happening, another business that is happening in Switch, we are ready for a launch of one or two SCVs, like LCVs, in later half of the year. And we are very excited about that because this is kind of a new segment that we think the penetration would be the maximum as far as electric goes in the near term.
Sir, if when you speak to the industry people, they say that in the CV segment, especially the mining side is where we're going to see a lot of electrification of vehicles going to happen first. Do you see that trend happening, and are you prepared for that trend?
Yeah, and that is, I think, right. I think the penetration of electric would happen first in buses, followed by LCVs, and then followed by some specific niche segments, like you mentioned, mining. Another thing, I mean, there are several niche segments, even in the truck side, this penetration could happen. So as I said, buses, we are already there. We have a good pipeline of orders. LCVs, we are getting ready to launch after Diwali in the second half of the year, sometime. And on the trucks also, we are preparing our technology. And, we would start conducting some customer trials in some time. And once the technology matures, we'll take it to the market.
What kind of order book are you sitting on the EV side?
You mean on the bus side?
Bus, yeah, and the entire EV portfolio.
No, on the rest of the portfolio, other than the bus, there are no orders because there is no market.
You will have
yet.
LCV coming forward, but okay, but on the buses
so
side?
LCV, yeah, so for the LCV, we are not going to get orders. What our intention is to work with certain customers, do some large trials on LCV, electric LCVs. And once we mature the market, create the right ecosystem, and also mature our technology, then we will go for commercial launch, which would happen sometime in the next year. For this year, we are just going to focus on doing some large customer trials. On the bus side, we have a significant order pipeline. Now the effort is to get it into execution, so talking to STUs, finalizing the routes, getting into the contracts, legal contracts and all that. So that may take some more time, but yes, we have orders in hand.
And what percentage of that order book would be executed in this fiscal?
It's hard to say because this is like a thing that we have to discuss with the government as well, various STUs. But that we have more than 700 buses flying on the road, electric buses flying on the road, most of them in India and some in UK as well. And going forward, whatever order pipeline we have, we'll try to execute as soon as possible. But it'll hard to kind of give you an exact number on that.
Okay. Mr. Agarwal, my last question. You had guided for double-digit profitability. You are on track for the full year to achieve that?
See, if we have achieved it in Q1, that
I'm talking
makes
because there are multiple factors that come in. There is
I
seasons
know.
come in. So I'm just trying to...
No, I know. And we are also, we are confident, but we are cautious as well. Because having achieved it in Q1, now we can't go back. So there's more pressure on us to kind of up our ante, So definitely that is the intention, that quarter on quarter, if we can retain our double-digit margins, then that will give us really a good momentum going forward.
Mr. Agarwal, it was a pleasure talking to you today. Thank you very much for joining us on BQ.
Thank you. Thank you for
Thank you.
having me.